G'day everyone, Greg Canavan with you with another Rum Rebellion update. I'm recording this about 12:30 on Monday, the 13th of May. Obviously all the news last week and for continuing this week is on the US-China trade negotiations, whether they'll come to a deal or not. Certainly doesn't look like either side's willing to make the concessions necessary to come to a deal. So I think we're just going to see continued volatility this week. The charts I want to show you today indicate that a lot of the markets that are exposed to China especially indicated that they were topping out even before this news, or the news broke last week of the increased tensions in the trade negotiations. So let's start with those now, and I want to start with copper, which is obviously a very economically sensitive metal, and we'll turn to that chart now and have a look there. As you can see, copper's been bumping up against a long-term resistance level, what was previously a support level back in 2018 and 2017. You can just see there to the left of the chart. It's been bumping up against that resistance for quite some time. Couldn't break through to higher levels, and then started to correct lower when the news of the trade stuff came out last week. So that was already on its way down. Connected with that, the next chart here, I've got the industrial metals producers. This, I guess, follows the equity prices of the companies that produce things like copper and lead, tin, zinc, nickel, those sorts of things. As you can see there, those share prices started to turn down in April as well, or peaked in April and then started to turn down. And they're now back at levels probably last seen in January of this year. So that's really that's an indication of the economic slowdown that these stock prices or companies saw get underway even before the trade negotiations broke down. The other main commodity price that's worth looking at here is the price of Brent crude. In April, popped above that resistance level, was looking quite strong, but almost just as quickly broke back down below there. So that's an interesting level to keep an eye on for Brent crude. If you do follow the energy markets, that's around about 71 US dollars there. That's important to look at, trading around or just below that level at the moment. By look at this chart, it suggests to me that we're going to see a continued correction in Brent crude. But in saying that, the moving averages suggest that the price is trending higher, and you know, there is a chance we could see it break back above that resistance / support level there. And if it does so, then that's going to be a bullish outcome. But just given the other indications in the commodity markets, that suggests to me that you might see crude oil correct lower over the next few months. Moving on to the next chart here, we've got the Hong Kong market, which is the Hang Seng index. Once again, that's it's showing a similar situation to the copper market, in that it's bounced up against that support / resistance level for a month or so there, and then it's really come back down hard in the past week or so as the trade negotiations, or the lack of an outcome on the trade negotiations, has hit the market quite hard. Same thing with the next chart on emerging markets. The rally in emerging markets didn't actually quite even touch that support resistance level, and before it's got there, we've seen that turn back down as well. Moving on, the Korean stock market. I guess the reason why I'm showing you these charts is they're all related to the China-US trade deal, and obviously these Asian markets are very sensitive to Chinese demand, given that the Chinese economy is such an important part of global economic growth. So Korea, that was quite a lackluster rally from the lows in January. We've seen in recent weeks the US markets and Australia, and I guess a lot of developed markets, have rallied all the way back to their highs of 2018. You can see here that Korea peaked in January, February 2018, big correction throughout the year, and quite a small rally at the start of 2019, and now we're seeing that rally break down, and the Korean market is back down to levels seen in January this year. So there's a risk that we could fall back to those lows from January 2019, October 2018. Next chart here is the Singapore market. This is a bit more reminiscent of the Brent crude chart. It broke through the resistance level there, but almost immediately broke down below that. These failed sort of rallies or false rallies are a good indication of a market that just doesn't have any more upward momentum. I mean, that's obviously saying an obvious point, but it's an ominous point as well, in that when markets cannot sustain upward momentum and they turn back down quite sharply, along with all the other markets that are doing the same thing, that just gives you an indication that we could be at a major turning point here for global markets. Finally, of the chart for this week, Taiwan. You can see that the Taiwan Stock Exchange, it's done quite well. It's rallied all the way back up to the peaks of 2018. That's partially because it's so exposed to the US tech sector. Semiconductors are a very big business over in Taiwan. They've got some big semiconductor stocks on the exchange there. So that's more of an indication or a reflection of the Nasdaq. The Nasdaq rallied back to its old highs last week as well. But once again, we've seen this turn down quite sharply. So that's all the charts got for you this week. I guess the main point is that last week I showed you the developed markets, the US and Australia, and how they might be turning down with a few triple tops and double tops, charting patterns forming there. This week, the Asian markets are showing similar indications that the rallies are running out of puff. So obviously a lot of the news will depend this week on the outcome from the trade negotiations. We're going to see headlines pushing markets either way, but the volatility probably indicates, or more than not indicates, the uncertainty that's happening in markets right now. And I think you need to be prepared for further falls in the weeks ahead. I'll leave it there this week, and I'll catch up with you again next week. Thank you.